Hello everyone and welcome to my channel. Today I will show you how to prepare a multiple-step income statement from the provided balances. The balances are provided on this slide. The accounts are listed in no particular order and include accounts of the Alonso Corporation on December 31st, 2023. A multiple-step income statement contains several sections, subsections, and subtotals. The statement separates operating transactions from non-operating transactions, matches costs and expenses with related revenues, and highlights certain intermediate components of income that analysts use in assessing financial performance. I have a video that covers multiple-step versus single-step income statements in detail. I'm posting the link to this video here and in the description down below. Let's get to our example. The first step is to go over the accounts and decide whether they belong to the income statement or the balance sheet. We only need revenue and expense accounts for the income statement. Let's highlight the income statement accounts. The following accounts belong to the income statement: interest revenue, sales returns and allowances, sales discounts, cost of goods sold, selling expenses, administrative and general expenses, interest expense, and loss from earthquake damage. The first section of any multiple-step income statement is the revenue section. The revenue section includes sales revenue, sales returns and allowances, sales discounts, and net sales. In the income statement, we first list sales revenue, then list sales returns and allowances and sales discounts. Both sales returns and allowances and sales discounts are contra sales accounts and decrease revenue. Next, we list the cost of goods sold, which is $621,000. Cost of goods sold is the total of all costs used to create a product which was sold in the reporting period. The gross profit subtotal represents the difference between sales revenue generated from selling products and the cost of those products. In our example, the gross profit is $564,000. Operating expenses, or OPEX, refer to the costs incurred by a business for its operational activities. In other words, operating expenses are the costs a company must incur to perform its operational activities. Operating expenses include selling, administrative, and general expenses. In our example, we include selling expense and administrative and general expense in the operating expense section. The total operating expenses are $291,000. Operating income measures the corporation's results from its total operations and takes into account the selling, general, and administrative expenses. In our example, the income from operations is $273,000, which is the difference between the gross profit and operating expenses. The next section includes other income and expenses. Other income and expenses represent income from sources other than normal operations of the company. We first list interest revenue, which is $86,000. Next, we list interest expense of $60,000 and loss from earthquake damage of $150,000. Income before income taxes is $149,000. It is the difference between income from operations and other revenue and expenses. The next step is to calculate the income tax expense. For simplicity, we assume the total effective tax rate is 20%. The income tax expense is $29,800, which is income before taxes of $149,000 multiplied by 20%. Net income is the final measurement of the corporation's performance. Not only does net income measure the profit or loss from business operations, but it also measures the impact of any other secondary income activities or expenses. After we subtract all expenses from all revenues, the net income is $119,200. Note that if a company's expenses exceed revenues, the result is a net loss. Now let's look at the income statement. It starts with the sales revenue section, then has operating expenses, which are followed by other revenue and gains, and other expenses and losses. If you are required to calculate net income per common share, divide net income by the number of common shares outstanding. Assuming 100,000 shares of common stock were outstanding during the year, the net income per share is $1.19, which is calculated as a net income of $119,200 divided by 100,000 common shares. That's all for today. I hope you found this video helpful. If you did, please subscribe, hit the like button and ring the notification bell so you are notified when we release more videos like this. Visit my channel to view more videos on financial and intermediate accounting. Thank you all so much for watching, and I hope to see you all again in the next video.